Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
How's it going out there? It's January 9th. And I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. So I hope you follow me on Twitter right now. So it's about the Consumer Electronics Show, which is awesome. Be sure to listen to next week's Wall Street Unplugged podcast. I'm sharing everything I learned. It's usually a ton of new ideas, new trends. Of course, my best idea is going to be reserved for my paid subscribers. But I share a lot, pictures, this and that. Hopefully you all follow me on Twitter. But it's a huge opportunity, guys, because for the first time since I can remember, there's tons of tech companies with great technologies that are growing, that are innovating, that are also trading at 30 to 40% off their highs after this massive sell-off. I mean, this market, I'm being dead serious with you, I'm seeing more opportunities in terms of individual ideas, not just in tech, and in a lot of different sectors, all over the place. I mean, I would say since the credit crisis, pretty close. Because if I had a guess, you don't have the crystal ball here, we're pretty close to a bottom right now. You look at the factors that pushed us lower. You had tariffs, right? President China, they're going to meet, and they're getting much more serious because I talked about tariffs a lot. I said to China, they better come up with a deal because they're in a recession. They're going to get into depression. And look, not even GDP, but individual sectors, housing. You saw the auto numbers come out worse than whatever, 60, 70 years. Everything is completely crashing. And now we're seeing it impact the U.S. as well, right? Even with Apple, the biggest company. So China's, whatever, terrible. And they have even more problems there with patents and stuff like that. But they're going to get together and say, okay, we need to figure this out. And it's going to happen in the short term. And they are meeting really soon. Then what is one of the other things that pushed us down is the Fed. The Fed came out, with blinders on and said, hey, we're raising rates. We don't care. And everybody expect that policy to stop right now, immediately. Well, in December. And they said, nope, there's going to be 2 more rate hikes. And that really, look at the volatility you've seen, more volatility you've seen during the holidays than probably ever. You're looking at massive sell-offs too. It's incredible since that meeting took place. But you're looking at what the Fed say. What do they say? They're like, we're going to raise rates twice next year. I don't see that happening given that inflation has tailed off when you look at the numbers, and plus the huge risk we're seeing in the global markets. So even if I'm wrong, and they do raise rates twice, 2019 is going to be the end of the tightening cycle. Now, I don't care if you agree with it. I don't care if you're like, well, easy money policies, I got to go high. I don't care. I don't care. Okay, you can look in a mirror, fight with yourself, argue with yourself, take to social media, go crazy, whatever. My job is to make you money. And when this Fed stops raising rates, the market is going to move higher. And in fact, every single tightening cycle, where we had tightening cycles, right, and the Fed's raising rates, where we didn't have a recession, and we're looking at about 4 or 5 periods of the last 25 years, almost every single time, the bottom was marked when the Fed stopped raising rates. And they're going to stop next year, regardless if they raise twice or not. I think it's going to be a lot sooner than later. And we're already seeing some of the Fed presidents come out saying, all right, we should stop raising rates, a little crazy. We're seeing it right now based on the data. And that is going to happen. And since there's not much evidence of a recession right now or coming, and look, I'm a data-driven guy. I'm not, just, hey, a perm bull, perm bear. You look at the data. If you look at unemployment, wages are still rising. You look at housing, manufacturing. Yes, we're seeing these areas showing signs of a slowdown. It's an economy that's cooling off, but it's much, much different than a recession. Why is that a big deal? Because our stock market should be trading probably around 16 times earnings instead of 14 times earnings if we're not in a recession. You're looking at this, we should not have 20% of the S&P 500 trading below 10 times earnings, which is incredible. So we're close. I'm not saying go all in. Again, we know that those bands, they could stretch a lot further. Never do. But I start picking away here. Take some small positions, some of your favorite names that are down. Because remember, one of the biggest things is you don't want to hate the company. You don't want to hate the stock market. You want to hate the price that is trading at. It's not personal where, I was talking negative about Apple and everyone was saying, well, finally the estimates that came down on 181. They didn't come down. There wasn't one sell rating from the analysts on the stock heading into the last warning. Over 40 analysts covering. Their average target price was 220, which is 30% higher before the stock fell 10% after they warned last week. But start picking away at some of these things. I mean, there's a lot of stocks where, look, Apple wasn't crazy about it at 220, 200, 180, but it started looking attractive at 160. It fell below 150. And it's not just Apple. There's a ton of industry leaders down 30% off their highs just over the past few months. Some of them deserve it. A lot of them don't. You're trading 10 times earnings, paying over 2.5% yield. And they're growing. They're growing their earnings 7%, 8%, 10%. They're growing sales 5%. It's not a recession. But you're going to find lots of ideas, and the risks that brought us down, they're probably going to not be around at least over the next 3 months, 6 months. So we're pretty close. So like I mentioned, I'm in Vegas right now, finding some great ideas for you at the CES. But as always, I did put together an amazing interview for you, and I really mean that. It really is amazing. Which I taped just before I left. My guest is Robin Sosnow, who's one of the top lawyers representing the digital token industry. She also specializes in representing early-stage businesses, online investing platforms, funding portals, broker-dealers, engaged capital raising, runs her own shop. She's located in New York City. Also has a joint partnership in a company called Digital Securities Law Group that specializes in digital tokens and blockchain, where I got the chance to meet her face-to-face in New York City, which took me like 20 minutes of security checks to actually get into the Trump Tower, which is awesome. Yeah, that's near Wall Street. But I've worked with her personally to get our security token to where we are right now, which is a ton of work. It's just a few weeks away from our launch, and the work that she's done for me for Curzio Research has been absolutely incredible. So I want to bring Robin on to hear, not to hear, but for you to hear from a third party, right? Instead of me talking about this theme, security tokens, and how big it is, I want you to hear from somebody else, okay? Because it's important that you start researching this industry, because it's not going to happen. It's happening now. The stories that are coming out, we're going to cover a lot of things that are going on. But what she's seeing in the security token industry is absolutely amazing, right? We want to do this. They come to her first. Obviously, she's not going to tell you the companies and things like that, but you're going to see the massive demand and some of the amazing stuff that's happening, especially over the past 3 to 6 months. I mean, so many news stories have come out. They've been lost with the market crash, and no one's really talking about it, but absolutely amazing stuff, including one company that trades on the NASDAQ with a $250 million market cap. It's been on NASDAQ for 10 years, that just securitized one of their drugs in their pipeline, the most promising cancer drug. So that's going to come out. It's public that happened, but you'll get the name of the company and stuff like that in a couple weeks. That is interesting. So you have companies on the NASDAQ. You're looking at mining companies, looking at biotech companies. That's pretty cool if you're able to take out, because when you're looking at a biotech or a mining company, you really want to invest in their prime asset. You don't care about the rest of the garbage. And now you're tokenizing it. Your stake in that, which is an equity stake, is tied to their best asset instead of to their whole company. That's an interesting concept. A lot of this stuff is happening. She's going to break it down, also explain the difference between Crypto 1.1, which was capital raises for utility tokens, and how that's totally different compared to what's taking place right now in security tokens, which provides equity ownership, investors that are backed by actual assets. So, guys, this is kind of an exclusive. I don't think Robin does a lot of media, at least that I know of. But I want to introduce her to you because after you hear what she has to say, you're going to see why I'm so excited on this industry, why we're launching our own security token, but more important for you. I know there's a ton of small business owners out there listening to this podcast. I hear from you all the time. You email, it's great, frankcurzioresearch.com. A lot of you say, hey, our companies are growing, we're doing well. She may end up being a fantastic contact for you if anyone looking to raise cash through security tokens. And it could be a great contact. If not, it's fine. But I built it up enough. So without further ado, here is my interview with Robin Sosnow. Robin Sosnow, thanks so much for joining us on my podcast.
Hi, Frank. It's great to be here.
Thanks so much for joining us. So, you're a first time guest, and you've been an advocate of equity crowdfunding, the Jobs Act, helping companies who are looking to raise money pretty much since 2013. My question to you, which is a pretty good introduction for the audience out there, is how did you get so caught up with digital tokens? Because, you know, before I hired you, I talked to a lot of lawyers, and I'm going to be honest, they don't know one tenth of what you know. How did you get so caught up in this industry, and when did you see like this huge opportunity within it?
Frank, thank you so much for the compliment. It's nice to hear because, as you know, I'm still a relatively young person, but I've been very involved and a huge advocate for the equity crowdfunding space since the Jobs Act first passed in 2012. It's really my experience in equity crowdfunding that led to my involvement in the digital securities industry. So if we flash back to the fall of 2017, I was running my practice, Jobs Act lawyer, and I was reached out to by a gentleman who's a very good friend of mine now, who worked at the time at a really big law firm, one of the big international firms. And he said, "Hey, Robin, we know you're the Jobs Act lady. No one in our firm has ever worked with Reg A Plus. Could you come in and talk to us about it?" So I did. And as I got to know this gentleman more, I learned that, well, he's a securities lawyer like me. His background and interest was in the blockchain space. So what was so cool about this Reg A Plus deal that I was getting brought in on was that not only were they using one of the Jobs Act exemptions, but they wanted to tokenize a rev share under in the way that they were structuring their offering. And for me, that was the beginning of my STO journey. Prior to that time, I had really just been a bystander and a personal investor in cryptocurrency, but I hadn't had the opportunity to work on the digital security side of the space until then.
No, that's interesting. And real quick, could you take us through, like in layman's term, really quick, because people are learning about this for the first time, and I have a lot of small business owners, and people have been asking me about security tokens now that I've been talking about it, and that we're launching ours pretty soon. Could you talk about what Reg D, Reg A, and Reg S are, like just briefly, because some we say those all the time. But a lot of people, again, now we, especially me, I know every single word and what they are, but just to bring everybody, put everybody on the same page.
Absolutely. So if we zoom out, we'll see within the securities space that any private company that's raising capital either needs to register their securities offering with the SEC, or they need to identify an exemption from registration to rely upon in their offering. That's where Reg D and Reg S and Reg A Plus and regulation crowdfunding come into play. Reg D is probably the most widely utilized private placement exemption. It allows companies to raise unlimited funds from essentially an unlimited amount of accredited investors, with the caveat that most companies choose not to go over the 2,000 investor limit. And with the Jobs Act, Regulation D was liberalized to permit general solicitation, which means that companies now can go on stage and pitch and put out their investment opportunities in newsletters like yours. They can put it on their website. They can put it on a billboard. They're free to communicate the investment opportunity to the public. Regulation A plus did exist prior to the Jobs Act under Regulation A, but it similarly was liberalized and made easier to access. So now under Regulation A plus, companies can raise up to $50 million in a Tier 2 offering from both accredited and non-accredited investors, which means that their customers or end users of their products or services could potentially become investors and brand ambassadors for them as well. Reg A Plus is a different type of exempt offering because it needs to be qualified by the SEC in advance of the offering's launch. This typically adds a significant amount of time and cost to issuers who are seeking to utilize this exemption. And regulation crowdfunding, which is Title III of the Jobs Act, enables companies to raise up to $1,070,000 from the retail public, from both accredited and non-accredited investors. And this exemption is typically used predominantly by seed stage companies, but interestingly, some more developed companies that are conducting STOs are also looking to this exemption to bring in the little guy.
And then, I mean, it's funny because this isn't scripted, guys. And, it's funny that, those are great definitions compared to, I was like, hey, Reg S is just international and stuff like that. So, no, that's pretty cool. Thank you so much for clarifying that, because that's one of the things that sometimes we make mistakes, even as newsletter writers. We just assume like, hey, we're talking about things that everybody knows about, but you put everyone on the same page. And that's what I wanted to do with this interview, because even when I'm getting questions, and a lot of people out there, they were investors in cryptocurrencies. What's the difference that you see? Because you've been part of crypto 1.0 or 1. Whatever you want to call it, where utilities, tokens,
Right.
These companies were the talk of the town. Everybody wanted in, and now people started to realize that most of these companies will actually never be companies, and they don't have the regulatory structure in place. You're not getting equity stake. They're tied to nothing. When did you see like the switch taking place from the utility tokens to security tokens? Because I think people may look at this and say, well, security tokens, that's crypto, and the whole crypto market's crashing, but it's really two totally different things.
Right. And I mean, they certainly are completely different value propositions. Utility tokens represent functionality within a platform, whereas security tokens represent ownership of real world assets, interest in funds, equity in small businesses, or even debt. So it's a completely different value proposition for a security token compared to the crypto craze of 2017. To answer your question, when did I see the shift? As a practitioner, I come to the table with the regulatory lens or the risk mitigation lens. And I actually have a newsletter myself called the Cloud Crypto Newsletter that we started putting out a year ago, January, that has highlighted the regulatory evolution of the crypto industry as well as the crowdfunding industry. So we saw throughout 2017 and then 2018 that the SEC, through enforcement and through informal speeches and remarks, started to crack down on ICOs. And I guess I'll give one illustration of it. There was a security instrument called a SAFT, Simple Agreement for Future Token, that was widely utilized by blockchain companies in their ICOs. And many of these companies chose not to utilize or comply with the securities exemption in the sale of the SAFT. So they raised money in exchange for SAFT, and they told people, when our network is built, you'll get the tokens. Some of them distributed tokens, and some of them didn't. And the SEC saw this activity, and they said, well, these SAFTs are securities, so what securities exemptions were complied with? And in many cases, there was no compliance. There was a public sale. There were non-accredited investors. There was no AML KYC. There was no accreditation verification. These were just securities transactions just off the cuff. And as the SEC's job is to protect investors in the United States, they came down on many of these offerings through enforcement actions and the requirements that these companies rescind and reimburse investors for their investment amount. And
when you saw, in terms of this whole entire industry, right? Because we're looking at again this massive shift. Are you getting questions from people from the outside, like worried about, like saying, all right, are they having trouble understanding what the difference is between these two, whatever you want to tokens or ways of doing business within the crypto industry? Are you getting questions on that? Are people understanding this, or is it still, there's a level of education that we really need to explain to people that this is maybe the way it should have came out in the first place?
Absolutely. There is certainly an educational component that's still needed. I mean, even in the crowdfunding space that's now been live for almost 7 years, there's still an educational component that's missing. So I wouldn't expect it to be any different in the STO industry today. It's just something that we all collectively have to make an effort to bring awareness and education to people who are trying to get involved so that they can make educated choices and strategic decisions for their businesses. One of the biggest questions that I get that really surprises me is when companies are looking to conduct an STO, but they're concerned that the STO is illegal or that there's not clarification as to how an STO should be regulated. And just frankly, when a company is raising capital in exchange for the sale of securities, whether that token represents an underlying asset or it represents preferred stock or it represents a rev share, there's a clear securities transaction going on. And there are, as we discussed earlier, a boatload of securities exemptions that the company can consider. So provided that the company chooses one and applies the compliance principles that are set out under it, there isn't too much regulatory uncertainty in the transaction.
Where does a regulatory uncertainty take place? Because, and I was going to cover this in a little while, but let's cover it now since we're into it. Where are you starting to see the institutions? Because I'm, wherever I read and even the circles that I'm in, and you have those circles as well within this industry where Goldman Sachs, the investment banks, you're seeing, hedge funds, these large funds have fiduciary responsibility to their clients. They can't just jump in because there's still not enough regulation within this industry. One, are you seeing, because, what I'm hearing out there is, these guys are ready to jump in because this industry is really threatening their business model, right? It just makes sense. One, are you seeing that? And what kind of regulation do we need? Because for me, and the way I've been explaining it, Robin, is you need to have it sort of like an E-Trade where you can go on, it's easy to trade, your money is safe, you don't have to worry about it. What are we looking for the SEC to come out and finally put their stamp of approval or just provide the rules in place where it looks like the institutions, that's what they're waiting for. And, they, not that they want to, they need to get into this industry because they're going to probably lose a lot of business if they don't.
Sure. So in my opinion, the clarity or regulation isn't needed to be changed or enhanced at the issuer level. I think that we have enough regulations as it is that govern the issuance of private securities. And I'm not looking for any additional regulations on that front, maybe less, or the liberalization of some of the ones that we're working with today. From a kind of overall perspective, I think that if we could see more at the exchange level, we have one exchange that's currently operational, and that's Open Finance Network. The secondary trading platforms for security tokens are going to be, in my opinion, the place where the regulators should focus. That's where the secondary trading will take place, where any required disclosures from the primary issuance companies will need to be made, where the resale transactions will occur. And the fact that we only have one operational secondary trading platform to date is not concerning, but certainly not fueling the growth or adoption of the industry.
No, that makes sense. And from, being in this industry, again, just learning everything I can, especially over the past 6 months as our tokens coming out, Curzio equity owners. There's over a dozen exchanges that are coming out over the next 12 months. Does that provide a good one? Because for me, I see that as an added benefit because, we have to go the accredited investor route in terms of us raising money. And there's a 12-month lockup period. But over that 12-month lockup period, I think is really good to the point where you're going to see more exchanges launch. You're going to get more opportunity. You're going to see what comes out with the SEC. The next, at least 3 to 6 months, you're going to see a lot more clarity, right? And it's going to be a lot more transparent. But I guess it's kind of a good thing, right, with that 12-month lockup period, because from what I see, there's, lots of exchanges that are going to be launched, and they're going to be SEC compliant.
Absolutely. In my personal opinion, this is the time to launch, because as you mentioned, the framework for these and the opportunity to list with exchanges is only going to increase in the year to come. Adoption will continue in 2019. Some people say that this is the year of the security token. So if you're intending to launch an STO, as you know, Frank, it's a multi-month prep process. You're required to engage with, at least it's highly recommended that you engage with reputable vendors, both on the legal front, the accounting front, and on the technology front for who's going to actually build your tokens. And then building the right relationships at the exchange level to facilitate listing in the future, if you're able to take those steps when the time comes.
Now, moving on from here, and thank you so much for clarifying that, because I know that's a lot of questions that I get. So hopefully we're addressing a lot of those guys for you. I'm truly excited about this industry. My file knows as people listening, I know, because I've been talking about it for the past few months, and we're getting closer to a launch, which again, I mentioned on past podcasts. Was there a moment for you where you said, you're just learning about this industry, you're getting into it, and you're seeing security tokens? Again, we're all learning, right? Because it's just a new industry. Was there a moment where you said, holy cow, I mean, this industry is going to be, 100 times bigger than I thought, or you didn't realize how big it was? Was there anything that you saw, or anything where you're like, because again, you said your firm is like, hey, let's cover this. But over the last 3 to 6 months, and the stuff that especially over the past few months, is kind of remarkable that this trend is not coming. It's here. You're seeing people do it now and releasing tokens. I was just curious, was there a moment that you saw where you're like, whoa, holy cow, I think this thing's really going to be big?
There have been a few. When I started to learn about blockchain technology itself, I became very inspired by some of the core values that are ingrained in the concept and philosophy behind blockchain technology, namely in its ability to create sovereignty for individuals and networks of people. So that I guess on a personal level and maybe intellectual level, that very much engaged me. Then outwardly, I went to a conference in Los Angeles maybe a year and a half ago, and now a good friend of mine named Dan Fleischman had put it on, and I didn't know what to expect. He said, just come. It was at night. It was at this beautiful theater maybe in Hollywood. I think it was called the Orpheum. And he said, just show up. So I showed up, and there were 1,000 people who had paid $100 to be there for like a couple hours performance. And a group of gentlemen that Dan's associated with called the Crypto Watch had put this on, and it was all about education, about bringing together the local crypto community or the community of people who wanted to learn about cryptocurrency, to set up a few panels to educate them on what the latest, current status of things were, and to get them involved. And these guys were so passionate, the crypto watchers, they were so passionate about the space that they were giving out private keys to crypto wallets to people in the audience so that they would be able to access their first ownership of cryptocurrency and start to experiment with what that means, what it means to be a crypto owner, what it means to send a bit of crypto from your wallet to someone else's or to an exchange, and to trade on an exchange. And that really got my attention because there was so much energy and enthusiasm in that room. And then the third point I'd make is when, obviously when the market went to the moon last December, it was really something to see. I mean, in my life, I had never seen any kind of market activity like that before. And I watched it day in and day out for months there. And it was a really wild, exciting ride.
Yeah, no, I mean, it's amazing where we've come from them too, right? Where I think even the companies that I've looked at, and I probably reached, hundreds and hundreds of the ICOs where uh, a lot of these companies have raised money based, and they have their timelines, and this is what we're going to do. And these companies, like, I think it's less than 2% that I found that are actually generating revenue, and no one has, I don't think anyone has really been paying anyone dividends and stuff like that. And again, they're not required. I think back then they would just, the only requirement was, hey, here's a token for you. With this, it's a lot, with security tokens, it's a lot different. And I guess, that leads into the next question. Let's say you're right and the SEC comes out and regulates the secondary market, which is what we need. In your opinion, what do we need to see happen before this comes mainstream or goes mainstream? Because you mentioned, like, hey, I went to this conference and they were showing people how to do this and how to get in cryptos. But what do you think, in your opinion, that we need to see if the SEC comes out? What else is it? Education? Is it just having companies that actually raise money that you're seeing are real companies that go higher, where they're generating revenue, paying dividends? Kind of like, is that something that we need to see before it goes mainstream? Because people are still skeptical because of what's happened over the past 12 months with ICOs.
Sure. So I think that you really are doing the industry a huge favor with your STO, Frank, because what we need are more high-profile companies utilizing blockchain technology in their securities offerings. As more companies take the route that you've taken, adoption will the flock will follow. But you're truly an early adopter and incredible advocate for this industry that we're in. And I really commend you for those steps that you've taken.
I appreciate that. Although everyone says, hey, first mover advantage, Alta Vista and MySpace were first movers too, guys. So, so it is nervous, but it's exciting at the same time. But, and I was able to get to this point thanks to your help and Securities and just using, the best people in the industry, which have been such a big help. And it's been difficult. We were working over the holidays, texting each other, right? Probably New Year's and on Christmas. So it's been crazy, but I'm glad we're pretty close to this point. And I want to make this balance, right? So, in our securities agreement, right, which we're almost finished with, all right, guys, I don't want to talk too much about it, but it's kind of like a prospectus where you list all the risks. And I ask you a question about them because, if you ever read a prospectus, it's kind of like, a drug commercial where the first 15 seconds are talking about how good the drug does. And then the next 45, if it's, minute long commercial, is all the risks and everything because, and you're like, hey, you need to make sure that you cover your what or whatever. But I wanted to ask you, what are some of the risks that you see in this business? Something that could not make this happen. Because for me as an analyst, when I'm very, very excited about something, I'm focusing on the risks more than ever because, just to balance it out. So what are some of the things that maybe worry you, or you're saying, wow, this could be, something that just makes this industry not get adopted as quick as everybody believes?
Sure. So I work with a partner, Simon Rivelis, under a joint venture firm called Digital Securities Law Group. And when we're evaluating companies to take on and facilitate and provide the legal documents for their digital securities offering, we like to look at a few different criteria in evaluating whether they're a good candidate for a digital securities offering and whether they're a good candidate for us. Whether we'll all be a good fit in working together. And some of the criteria that we look at include the stage of the business. So STOs, as you pointed out, are time-consuming, multiple moving part, expensive processes. And for companies that are really, really, truly early stage and potentially non-operational, but it's not likely a good fit. So that's the first piece of criteria we look at. Another piece of criteria is the motivation. So is the company conducting an STO because they're conflating it with the concept of the ICO? Or do they truly understand that by conducting a security token offering, they will be giving up ownership in their business, or they will be giving up a revenue participation in their interest in their business? Or alternatively, if they, for example, have a real estate venture, that they'd be offering up a fractional piece of ownership in that underlying piece of real estate, as opposed to the ICO context where companies were really giving up nothing. They were giving up access to their network, which in most cases they hadn't even built yet. So we're not as it's not as crucial to us that the companies be blockchain plays themselves, but that they understand the nature of a security token. And then finally, there's quite a big list of criteria, but I'll highlight this last piece, which is that we like to see the companies that we're working with are cognizant of the U.S. securities laws that govern, and also respectful of the international jurisdictional requirements that come into play when a company is selling securities offshore in another country's jurisdiction.
Yeah, and I'm listening to this too, Robin, and you bring up some great points where so when you're looking at the ICO industry, and even some of the people I haven't been introduced to, when I told them I want to do this, they're like, "Why are you doing this for?" Because I have a pretty good following. I'm fortunate, I'm humbled. Where if we did a traditional private placement, I'm confident that we'd be able to raise money. But this is something that's, of course, it's good for us where the costs are a lot lower. But for the investor, like this makes, I call it Uber, because Uber, you can't say a bad thing about Uber, right? I mean, it's what I mean that where you compare it to taxis, where it's cheaper, it's safer. The person, you can call them. You don't have to pay them. You just get in and get out. It gets paid through your phone.
Mm-hmm.
It's just, there's so many amazing benefits where. It just makes sense. Where when I look at this for the investor, doing a private placement, okay, fine, you come in, we have $25,000 minimum, fine, but you're locked up. So you're locked up for a certain amount of period, which is an average of 7 to 10 years, and that's assuming that we get acquired one day or we come out with an IPO. Where this is 12 months later, the token's going to be trading, and then it's going to be up to the investor if you want to hang out, if you don't, and I think that's why it's important that a lot of these pay dividends. But to me, it's almost scary to me how much sense this makes, because you're looking at an investment banking industry. Well, what do? Well, they're middlemen that just say, hey, okay, I know a lot of rich people. You want to raise money? Okay, here, give me 6%. They don't create anything. They don't do anything. I'm not ragging on them or anything, but with crowdfunding and going directly to the source and the costs are cheaper, the last thing I think would be liquidity, which, is seen we talked about right in the secondary market with the SEC, but this industry just makes a lot of sense to me, and that's why I'm excited about it. But, and I guess it's not really a question or anything because we're just talking about, but that is something, that you're mentioning where, I'm hoping that regulation does come out. I'm hoping this really goes through. But outside of those risks, I mean, what kind of demand are you seeing? I know you can't talk specifically about it, but has it been like increasing demand over the last 6 months, especially over the last 3 months? Are more people approaching you? I mean, what are you seeing in terms of, wow, is it getting crazy? Is it not? Because I want to know this demand as well. And, again, that factors into what we're doing here.
Absolutely. And over the last 6 months, and maybe even safer to say 4 months, there's been just an absolute flood and shift in interest to the security token offering space. So we certainly have our hands full. I was able to make 2 additional hires to my team in the last few months, which I'm really grateful for. And we see this as a major opportunity to serve our clients in a new space, applying principles from the crowdfunding industry and the traditional private placement industry. An interesting kind of anecdote here is that in our crowdfunding experience, we work a whole lot with microventures and with Republic. And these 2 regulation crowdfunding funding portals started off in the early days the early days being 2016, as offering, traditional securities and seed stage startup companies. And I'm not sure exactly when Republic Crypto launched, but they not only expanded the types of securities that they were willing to sell on their platform, but they actually created a whole second new company to facilitate STOs. Similarly, at Microventures, who we hadn't done any STOs with until very recently, has expanded their service offerings to the digital security space. So adoption is taking place. Investors are noticing. Companies are realizing that this is yet another way to seek out alternative financing outside of the venture community. And I'm hopeful and optimistic about what 2019 will bring in our STO journey.
Yeah, me too. And it's been amazing working with you through this. And we're excited that ours is coming up pretty soon. And which leads me to my last question. This is by far the most important because I read on your page that you're the founder of the National Alcoholic Beverage Licensing Lawyers Group. So that's a community of alcoholic beverage licensing professionals across the USA. I was just going to ask you, again, this is a very important question. Do you get to sample some of the alcoholic beverages before you grant these licenses? I mean, this kind of seems like a pretty cool group that you started.
That's very funny. Well, it's nice that you brought that up. So when I was in school, back in the law school days, I worked for an amazing lawyer named John Cannell, whose landmark client was a very famous Spanish winemaker named Jorge Ordonez. And I very, very fortuitously was able to not only try many of Jorge's wines, but even go over to Spain and check out his vineyards and dine with him and have the full Jorge Ordonez experience. So that chapter in my life inspired me to start the National Alcoholic Beverage Licensing Lawyers Group and get plugged into that community, which now in my crowdfunding efforts has brought me some really interesting liquor companies and beer companies along the way that we have had the chance to try in office.
Yeah, that sounds pretty cool. Well, Robin, listen, I want to thank you so much for coming on. I know, believe me, I know directly how busy you are because we've been working together for a while. But if someone wants more information on you, asking more questions or whatever, including where to find your newsletter, right? Crowd Crypto Weekly, where could they go?
So we have two sites. We've got our joint venture site, which is www.dslg.co, digitalsecuritiesLawGroup.co. And you can find me and our team at jobsactlawyer.com.
That's awesome. Well, once again, thanks so much for coming on. Thanks for going into a lot of the details where if people are interested in this industry, I know you got a lot of your questions answered today. If you have any more, you can email me, frankcurzioresearch.com. Robin just told you where to find her. But thanks so much for coming on. I really appreciate it.
Thank you so much, Frank. It's been an absolute pleasure, and I really appreciate the opportunity to work with you both on the podcast and offline.
All right, guys. Hopefully you enjoyed that interview. Robin, she's a workaholic just like me, where we were sharing emails pretty much every day over the past month, 10, 11 p.m. sometimes. And yeah, she was working just hard as I was over the holidays to get all the paperwork in order to launch our STO, which is coming out in a few weeks. And the work that she's done for us, again, has been nothing short of incredible because, man, there are so many moving parts. It was an education for me as well, but just understanding this industry, it's pretty cool to understand something that I know people are interested in, and it has so many moving parts. And the fact that we're able to merge like the Wall Street and crypto together, which is the way it should have happened in the first place in crypto, instead of these utility tokens, which Robin mentioned, that give you access to zero. They're giving you access to the products and services they didn't even create yet. And people were paying them, hundreds of dollars, tens of thousands of dollars, whatever, just to get into their offerings and getting nothing in return, right? It's not backed by anything, any assets, nothing. They just give you, a token. It means nothing. And put in perspective, if a company comes in and takes them over for $1 billion, you get nothing. You get nothing. You don't know it. That token's not backed by anything. And that's why the security token industry is so interesting, where you're going to see more companies. I mentioned earlier, like the NASDAQ, the one listed on NASDAQ, the biotech company. You're going to see mining companies, right? It tokenized their best assets. That's pretty cool to me. Like, why do I have to buy all the crappy assets, right? I mean, if you're looking at a pipeline of drugs for biotech, most of them are not going to make it, right? But sometimes they have a promising one, phase 2, phase 3. It's nice. It's almost like you're getting a royalty in that, but you're going to have your stake's going to be tied to that. Same in the mining industry. Most of the projects in a mining company are, especially if you're a junior, are never going to get developed. And if they decide right now, it would take 10 years before they actually produce. But some of these guys have one great asset that's going to look attractive to maybe a Gold Corp or Newmont Mining and stuff. And you're going to see this come out. I'm going to be mentioning it on the 20th when I speak at the Vancouver Investment Conference. The industry doesn't know it yet, the mining industry, but 1 year from now, you're going to see at least 5% of these companies issuing security tokens. I really believe that. And that's just a small part of the industry. It's going to be a lot bigger. So look, I wanted to put that interview together for you, even though I'm away, Consumer Electronics Show. I do not get paid anything, right? So this is my network. This is what I share with you because I love you guys. If you want to use her, no. If not, if you have any questions, you can go to her website, but start asking questions. And guys, look, I'm excited about this. You know it, okay? So it doesn't mean that, hey, if you invest in it, if you don't invest in it, whatever, but start learning about this industry. Just learn about it. Put a couple thousand in it here or there, or a couple $100, whatever it is, just so you have exposure to learn about it, because this is a trend that I truly believe is the biggest since the internet. Where if you're looking at it, there's just so many things, even today, remember, it was like creating websites. Oh, wow, you got AOL, you're getting online. Think just now, app revolution. I mean, AI, cloud computing, big data analytics. I mean, there's still innovations that are being made because our speed is getting quicker online. You can do everything, your whole banking industry. I mean, for me, I see like so many different levels when it comes to ETFs that could trade 24 hours a day where, listen, Apple just warned us down 8% after markets. Well, you're going to have ETFs or tokens that are tied to Apple that you can invest directly in Apple. You can invest directly in a bunch of technology companies where it's 24 hours and you could sell that before it opens up the next day. So there's a lot of interesting things to this. There's $200 trillion in real estate that's locked up. That's not liquid, where you could tokenize some of these assets. Andy Wall just tokenized one of his paintings, 31% of it. So you have an asset, you could sell off a piece of it to people, and that's their equity stake. So if you do it with whatever, a Ted Williams rookie card or whatever, and it's selling 20% of it, or Andy Warhol's painting gets sold 10 years from now, you're going to make a fortune on it. And the fact that it's a token, you could trade it back and forth. Maybe I want to buy into that painting. Maybe someone's like, hey, I'm going to sell it to you. You could trade it. So the opportunity is just amazing. Again, I explain it like it is when it's like Uber. It just makes sense. We are early to the party, which is awesome. But it's going to be 12 months before our security token is trading. And over that time, you're going to see a lot of things develop in this industry. We're going to keep you up to date. But please, even if you're not interested in what we're doing, start understanding this industry. It's a way that you're going to be able to invest in early stage companies where you're not going to be locked out of the Facebook and the Twitters. When you have the venture capitalist firms investing in these things, years ago before they actually go public, like Alibaba going public now, all the growth is gone at Alibaba. By the time it goes public at whatever, 70, 80 billion, Uber's going to go public. All the growth, isn't it nice to invest in some of these at their super early stages? And yes, a lot of them aren't going to work, but if one of them makes out, imagine if one of those you owned was Amazon, Facebook. That's going to be the opportunity you have for average mom and pop investors, individual investors like yourself, to invest early in really cool companies with tons of growth potential. So I'm going to bring you a lot of new ideas and things like that and really focus on this sector going forward, especially in our newsletter, Crypto Intelligence. If you have any questions, comments, you're interested, again, we're coming out in a couple of weeks with our Curzio Equity Owned Token for accredited investors. Feel free to email frank@curzioresearch.com. We have sites set up where we're educating you with videos and things like that. But again, even if you think I'm crazy, you hate me, and you don't want to do whatever, it's not about that. Just start educating yourself about this industry. Trust me, it'll definitely be worth it. So last thing here, be sure to follow me on Twitter, again, at Frank Curzio. Since I'm in Vegas, the CES, love giving you inside scoop, boots on the ground, everything. Of course, really cool stock ideas. And I always say this because the best idea is going to be reserved for the people who pay for my services, of course. But I do share a lot of stuff on Twitter when I'm there, live, things like that. So be sure, because I'm going to be there for a couple more days. It's going to be a lot of fun. So that's it for me. Hopefully you enjoy this podcast. I love putting things together for you, especially when I'm on the road and doing some work for you guys. That's it for me. Thanks so much for listening. Again, if you like what Robin had to say, you want to contact her, feel free. If not, no worries. Like I said, I love you guys, and I just want to share my network with you for anyone that's interested in doing something like that when it comes to security tokens. So, guys, I'll see you in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.